Hey everyone, this is. Hope you're having a great day. Today I'm going to be going over the second half of the wheel strategy, selling calls, the second part of one of these safer money making options with the stock market with options. And they really do make quite a bit of money for you, especially if you do the right research and pick the right stocks and sell at the right strike prices once you do your research, which I've gone over before, but I'll probably do another video in the future about how to go over that research. It doesn't take too long, but it is important to pick the right stocks, and I'll show you why. Like, you can pick some blue chip stocks, and if you do that, that's fine. You're not going to get as much money, but you'll make consistent money. But there are ways to make enough money in the stock market selling options, both puts and calls, to where you can make the average return of the stock market look pitiful. Like the average in the stock market return is 8 to 10% a year, and that's on average. Sometimes it's going to go up, sometimes it's going to go down, but that's the average if you take it as a whole. But if you sell puts and sell calls, you can get anywhere from 30 to sometimes even higher percent ROI on your money. And I can show you how just this last week on a $5,000 account, I made almost a 4% ROI in just 1 week. And that's repeatable week after week after week. So, for instance, in this upcoming week, if my 100 shares get called away, I've already made my $191 profit from that. So that's the almost 4%. And I'll sell puts again for another anywhere between 2 to 4% again. And then that's right there in 2 weeks matches the ROI that you'll get on average in the stock market and the S&P 500. But that's just 2 weeks. So you can make a lot of money selling options if you know what you're doing. Now, options can go wrong, and I'll make another video in the future about how to do a repair strategy if for some reason the stock that you chose goes down a lot, because sometimes you're bored or you just don't do the right research or just bad luck happens and the stock just drops considerably to where you can't sell calls for enough premium or enough money to make it worth it. So sometimes there are things you can do and sometimes you just have to wait. That's what I did for about a month and a half, 2 months on one stock. I had to simply wait for the stock to come back up a bit. So, but basically, when you're selling puts and selling calls, it's like you're calling the stock market asking for free money, and they say, here, take as much as you want. So, it's really not all that hard, but I'll show you on an example. I just did this last week on how to make that kind of returns. Like I said, you don't have to copy this. This is not financial advice. I'm not making stock recommendations. Like I said in a future video and in past videos, I've shown you how to do the research to pick the right stock, and each person is different. You might choose a stock that you like that I don't. I might choose a stock that I like that you don't. So each person's different, each person's strategy is different, but whatever you decide to do, make a plan. So if you're going to sell a put, make sure you want to own the stock and make sure that you realize that there is some risk to where if it keeps going down, you either have to do a repair strategy or you have to wait. There is simply no other option. But at least by selling calls, you actually have something to look forward to. You have money in your account, and by selling puts, if it goes down, you have an asset, you have the shares. Whereas if you buy calls and it goes against you, you're completely out of the money. Like, you lose your whole premium that you paid and you get nothing for it. So I am an options seller. I am almost never a buyer unless I'm doing a poor man's covered call. And that's a completely different type of strategy. That's one where you're very bullish on it, where you you're really, really sure that the stock is going to keep going up. It might go down in the short term, but you're putting a call out where you're buying it and it's over a year away from expiration. So over the long term, you think that the stock is going to go up. And you can sometimes sell calls. In fact, most of the time, as long as you're careful, you can sell calls against that as collateral, but you have to be extremely careful with the poor man's covered call. You cannot get your short call assigned, which is the one that you're selling. Because if you do, the long call, the one that you want to make the most profit on, is going to be exercised to use to supply the 100 shares for the short call, the one that you sold. So you lose all that profit. So just be very careful. If you want, leave in the comment section below. If you want to know more about the poor man's covered call, I have covered it briefly in my wheel versus the poor man's covered call. But just let me know if you're interested, and I'll go more in depth into it, the differences between the wheel and the poor man's covered call. Because they are differences. One isn't necessarily better than the other, but I do consider the wheel to be safer than the poor man's covered call. And here I can show you again on Robinhood and my $5,000 account the kind of returns I've made. So here I am on Robinhood at the stock that I've been selling a bunch of calls on after I sold a put and got assigned. It is Marathon Digital, ticker symbol MARA or MARA. It is a cryptocurrency stock which does mining of cryptocurrency, more specifically Bitcoin. So it also mirrors the price changes in Bitcoin. So when Bitcoin goes up, so does Marathon. And when it goes down, so does Marathon. So I've been in this position with this stock several months. I did have to go a month or two where I wasn't able to sell any calls because when Bitcoin's price crashed, then so did Mara's. And so I just was patient and I held onto the stock until it started to come back up. I wasn't going to sell calls below my cost basis, which in this case was $48 per share, and lose money if the price were to suddenly jump up and I were to get the shares called away from me. So what I did was I just waited, and then as you can see, I sold a call. Well, more specifically, this is more of a second call because last week I had sold a $50 call for $150, and then on Friday it was obvious that it was going to be not called away. So what I ended up doing is I bought back the call cheap and sold another one ending this Friday, the 29th, and I got $191 in credit. So that was almost a 4% return on my $5,000 account ROI. And if it doesn't get called away this week, like right now, after hours, it's trading right at $50.03. So if it gets called away on Friday, then I will start all over again by selling puts. And if it doesn't, I will sell another call at least $50. And you can see how much money you can make. And this is for this week, so I'm not going to really pay much attention. But starting for next week, if I were to sell a call again at the $50 range, I'd get $313 or $3.13 per share. And if I wanted to, I could even sell them at the higher 51 or 52 if I was willing to take a little bit less premium. But if it were to jump up, I would get more profit from my cost basis of $48 per share. And if it does get called away next week, I'll be selling puts at $50 to $51 and getting anywhere from $299 to $300 something dollars for selling a put. So that will increase my account again. I will be removing some for expenses, but you can see if you know what you're doing, you're patient, you do the research, and you believe in the company that you're selling puts and calls on, you can make a lot of money. You just have to do a little bit of research. It takes sometimes just a few minutes to at max maybe a half hour to an hour to do the right research, especially if you truly believe in a company. and then after that, you're golden. I mean, and if something goes wrong, there are ways to lower your cost basis, or you just be patient and wait. Because if you truly believe in the company, the financials are good, then eventually the stock will rebound, and you're not out any money. It's not going to be any real loss, because any loss it shows, it only will actually happen if you were to liquidate and sell those shares. If you don't do that, you haven't really lost anything. So keep that in mind. The balance you see on your cash balance, or the value of the shares, changes based on the share cost, of course. So just realize any loss isn't a real loss until you sell. I hope you all enjoyed the video, found it helpful, and I hope you learn more about options. Options are a great way to make a lot of money in the stock market. They are one of the safer ways you can trade options. It's not the safest way you can trade in the stock market. In my opinion, the safest way to trade in the stock market is just to buy a total stock market ETF like VTI and just hold it for the rest of your life. That's the safest. It tracks the stock market, and you're not going to really lose or gain a whole lot. You'll still gain some when the stock market goes up and lose some when the stock market goes down. But options are a way to use leverage so you can control or manipulate 100 shares per contract, and you can do it for a lot less than just having 100 shares outright. So that's both the case in selling puts and also in the poor man's covered call. And I can say that's for selling puts too, because even though you are buying it at a strike price, which makes it seem like it's expensive, the premium that you're receiving for selling the put is lowering your cost basis. So say you sold a put for $3 a share, or $300 at, in my case here, Amara, $49 per share. So then that would lower your cost basis to actually $46 a share. So you're getting a discount. If you liked the video, don't forget to hit the like and subscribe button down below. It does greatly help out my channel. If you're interested, you can join my Discord. It's free, and it will be linked in the description below also. Hope you'll have a great day, and good luck on the stock market.